So we've got a great session lined up for everyone today. We're looking at raising investment for online and trade retail. So in terms of how we run these sessions, we're all set up as webinars. If you've got any questions as you go through, feel free to post them in the Q&A or the chat, and I'll be keeping an eye on those as we go through. And what we've got lined up for today's session is we've got two of our guest speakers talking about their own investment journeys. So we've got Alan from Brewgooder starting us off, looking at the Brewgooder journey. And then we're going to ask Reuben to talk about his journey looking at investment from Locavore. I'm not going to tell you much about their organisations because I've asked them to introduce themselves and their organisations. Less chance of me saying anything that's wrong then, which is always the best way, I think. And then we're going to do a bit of Q&A for Alan and Reuben, if there's any questions that come through. And once we've done the investment journey presentations, we're going to bring in Rachael. So Rachael is convener of our Retail Academy at CIS and wears many, many other hats, and I'll do that when Rachael comes on in her session. And then once we've done the guest presenting today, I'm just going to ask everyone who's on the presenting to mute. Once we've done all the guest presenting for today, I've got just some generic slides around looking at social investment, more details just in terms of looking at applications, what's helpful when you're starting to look at raising investment, some top tips, and I guess how to make applications into CIS and other social investment providers. We're going to do a bit of an introduction around that. And then last but not least, we're going to be joined by Toby Sanderson from Community Shares Scotland, who's going to be taking us through the Community Shares model. So thank you to everyone for joining us today. What I'm going to just ask everyone to do is switch off your video if you're not presenting, and then we know we've got the focus on the presenter at that time. And I'm going to hand straight over to Alan to talk us through Brewgooder and your investment journey. So thanks, Alan.
No, thank you, and thanks everybody who's on for sharing your living rooms and bedrooms and whatever rooms that you're currently working in at the minute. It's a strange time, and I think I guess finance is a massive concern for a lot of people, and there are challenges, but there are also opportunities. I'm the founder of a craft beer brand called Brewgooder. We exist primarily, or have existed for the past 4 years, to bring 1 million people clean drinking water, and that we do that by selling beer and using the profits to fund clean water projects. And whilst that's been the sort of driving factor of the past 4 years, what we've actually also kind of recognized is that we're probably a bit more than that. We're probably more of a craft beer brand that has a purpose, which is to empower our drinkers to improve the lives of other people. So over lockdown, we've done various different initiatives that have kind of spelled that out, really. We've launched a campaign to get beers in the hands of frontline NHS workers with messages of support. We've also launched brew industry-wide groups for anti-racism and LGBT inclusion, because really probably how we understand our business now is very different from the first 4 years. And when we first started the creation of the idea of Brewgooder, we were kind of lucky in probably two respects. The first one was that craft beer was such a fast-growing industry at the time, and this was back in 2015, 2016 when we were looking at it, that people were willing to take potentially risks on backing entrance into the market at a time when the market was growing, and therefore there was a reasonable chance that in the first few years anyway, some of these brands could gain traction. But when we looked at how our business was structured, it was actually quite in what I would say is a naive business model. It was that you make money, then you give some of it away, albeit to a cause that you feel truly passionate about. But what it tends to do is actually undermine the ability to reinvest into the business. And we didn't really kind of anticipate that as being a problem at the time. And the second thing that stood our favor was the notion of crowdfunding, especially from a retail investor point of view. So anything that's on a Crowdcube or a Cedars or a crowdfunder platform was something that breweries used to get their name out there, to get their beers out there, and to get working capital. And we launched a crowdfund for Brewgooder, albeit on a reward basis. So someone would pay 50 quid and they would get a box of beer and a t-shirt delivered to them, or, you know, variations above and below that. And that was pretty initially successful. We raised 60 grand from about 1,000 different backers. And then we went on to try and scale up that production. We then went on a bit of a journey which has been developing with the guys at CIS. So initially we, through the help of Rachael and the team on the Retail Academy with ASDA, got an initial loan from ASDA to for the, I'm not sure what the specific fund is, and I'm sure it still exists, to effectively allow us for working capital to hire people, to kind of kickstart the business back in 2016. And that was fantastic. That then developed into a more ambitious CIS Ventures venture debt investment, which is just over or just under 150 grand's worth of finance to allow us to scale from one beer to a few additional products and main lines, and to attempt a project called the Global Gathering, which involved 254 brewers around the world getting involved and effectively releasing a beer in their own territories across 24 different countries. And then COVID happened, and that kind of ran a massive coaching horses, both through our working capital and through our channels that we had for selling beer, and also through that campaign activity. And kind of what it taught me was that you have to explore other ways than just debt, and you have to look at them really, really hard in order to evaluate what the best thing is to bring your company to scale. Now, in many instances, that's fine. You know, that's a workable, really solid model, and it's available, and it's available with potentially no loss of control, and it's available with people who are super supportive lenders like CIS and CIS Ventures would be. But for us, it's now a massive challenge because we're in a position where our business model only allows for debt to grow, and you can only grow by adding to that debt pile considerably. So what we've used COVID to try and understand is to try and imagine business models that we have which you can grow through equity, but that equity is ultimately linked to your purpose. So I think that, you know, everyone here has probably started or is involved with businesses, and they've done so from a purpose-driven point of view. So whether or not you want to help your local community, whether or not you want to tackle water poverty, you effectively want to make a positive difference in the world. And I think that if you can, and it takes a lot of internal introspection, it takes a lot of your own personal views on how to raise finance, but if you can find a business model that basically creates an impact, and that the bigger it grows, the more impact it can create, then you have a magic formula there for something that other people can invest in, and hopefully bring you the resource that you require to hit that scale and to make that impact come to life. I think increasingly, whether you look at the likes of, you know, JP Morgan and Unilever and all these, you know, billion dollar companies, they're actually putting purpose, how they define it and how they've stumbled upon it, as a really central pillar for their existing brands and for any brand they invest in, or likewise any sectors that the likes of a JP Morgan will invest in, because I think there's a massive consumer switch towards purpose-driven products, particularly online and in retail, which is matched by an appetite for investors to invest in, whether they be institutional, like the likes of CIS, or whether they actually be, you know, personal investors or retail investors that invest through the likes of a Moneybox ESG or something like that. So I think that really we're at an inflection point for raising finance in maybe a traditional way for normal businesses, which are an equity raise, for example, for startups, but that is probably a little bit unusual or alien to people, including myself, for the first 4 years of my journey, in wanting to go down a much more loan-based route, with sympathetic lenders or people who got what we were trying to do, rather than to actually go out and ask for private investment to make things a reality. So that's kind of where my journey has led me in many respects. And I'm here to kind of hopefully answer some questions or some challenges that you guys might be facing, or to talk about any topics, because everyone's journey is unique. Ours is certainly not special, but it has definitely brought us to a point where we're looking at reevaluating how we do things without ever sacrificing the purpose of why we do it. And I think if you can really square that with the ability to resource your ambition or your dream, then you're onto a winner for sure.
Thank you, Alan. I can already see that there's a few points that I know I've noted as you've talked about that, and certainly if you look at traditional business models, often new starts look first at equity in terms of growth to scale, and then debt. And I think it's always quite a challenge, I think, in the social enterprise sector in terms of equity often isn't the option, because the legal setup of the business model can be quite different and make that more difficult. And I think as we've seen more enterprises kind of go down the product and retail route, I think that option to scale is quite different. And I think it's starting to, certainly within some of the conversations I now have in social enterprise, people are, I guess, very much looking at, do we look at social enterprise based on legal structure, or do we look at it and judge it based on impact? And I think it's a really interesting conversation and debate.
Yeah, so just on that, I mean, I totally get that. And I think that we need to be, I genuinely think there needs to be a conversation of whether or not the legal structures actually hold back what we're trying to do, full stop. I would not want to be in a position where I could feasibly see, the delivery of impact or empowerment to 1 million people that's in any way constrained by my legal structure. Now, I'm massively out on the sort of the opposite end of that, where I think that if that's a barrier, and that's a barrier to multiple organizations, then as a sector, we need to start replacing that business model. And we also need to start talking about ourselves not as social enterprises, but as purpose-driven businesses. If you're a business, if you're selling a service, selling a product, you are a purpose-driven business. You're not necessarily a social enterprise, because I think there needs to be a lot more nuance and a lot more savvy to keep up with a potential wave of capital that can come into the sector to help us to achieve what we want to do, if that is purpose rather than, exit or financial gain or whatever that looks like.
Thank you. I mean, legal structures is certainly a session we could have a whole conversation on, and I'm keen to keep the focus around investment journeys, but it's certainly one of the reasons I think why CIS went to look down the CIS Ventures route, to look at that purpose-driven approach just as much as the kind of social enterprise one. So an important topic for sure. I'm going to see if I can bring Reuben in, and we're going to come to questions at the end once kind of Reuben and Alan have both presented. And I already like that Alan has started to give us the link as well in towards crowdfunding and what Toby's going to speak about. So I like it when the session feels like it's coming together. But we're going to hand over to Reuben to just talk about his investment journey now at Locavore. So over to you, Reuben.
Yeah, thanks very much for having me in today. It's quite interesting to start on, sort of talk of equity and all that kind of thing, which is quite a debate going on in social enterprise at the moment. I'm probably further down the path of sticking more to our guns on social enterprise and the code, not seeing that diluted by some form of business for good, which is really just green consumerism. I'm founder and managing director of Locavore. We started in 2012 and began trading in spring that year. Really is an alternative to supermarkets, which as large corporations I see as problematic at most levels. They're organizations that exist for the benefit of their shareholders. So they exist to make profit at whatever reasonable cost. Yep, there's a bit there around consumer pressure, government standards that they need to meet, but effectively they're not there as an organisation. They're there as an organisation that exists to extract wealth from our communities. They're not there to, and they'll do that sort of for promoting unhealthy, unsustainable choices, and don't address the long-term needs of our society for a sustainable and fair economy, which leaves us with a planet that we can live on. So that was the kind of base point for starting Locavore. We want to build an alternative model to that, one that's more financially redistributive, something that equity in a business doesn't allow, and also better for the environment, for communities and local economy as well. So really it's about using food as a vehicle for the social environmental good. It's looking at localizing or shortening supply chains. It's about organic and sustainable and agroecological agriculture. It's about paying a living wage. It's about paying the fair tax and contribute to a thriving culture, a thriving food culture, and a network of independent and progressive businesses that have the well-being of society and people and the environment at their core. So we're really focused on our activities being the thing that delivers that. So everything we do contributes to building this better society, I suppose. So that's really embedded in what we do. In terms of the activities and business strands we have at the moment, we run an organic supermarket on the south side of Glasgow, 6,000 square foot, about the size of a Tesco Metro or a Sainsbury's local. Similar offer to them, except everything there is sourced with thought. There's been consideration there, and when you spend £1 with us, it does a lot more for the world than your pound at Sainsbury's or what have you. We deliver veg boxes as well. We do about 2,000 boxes a week that we deliver across central Scotland. We're a grower of local organic veg. We grow at 3 sites in and around the city here in Glasgow, and support other independent shops through Locavore Trading, which is a wholesaler linking small organic producers with shops like us through short supply chains, allowing them to have a good value, wide offer that lets them compete with supermarkets. On the kind of non-trading side of stuff, we run a project called Grow the Growers. It helps people who are interested in growing veg set up as small-scale organic growers, so making a living out of that. And we've got a good food fund which helps people facing food poverty access healthy food. And in terms of scale, last year we turned over 3.5 million. We employed about 80 staff. And yeah, going on to an investment journey. We've been going quite a wee while, but we started off very small. I started with a £4,000 grant from First Port, and over the first few years, the kind of growth was really just fueled by slow, steady turnover, odd grants here and there, and a bit of crowdfunding. So over that first year, we ran a very small shop and began to look at the growing side of things. So our first crowdfunder, I think it was just for £10,000 or so, and that was to start up our market garden. So we let people, we asked people to invest small bits of money in return for rewards. So, you know, kind of put in £20 and get a box of eggs every week for a month or two, or have an apple tree named after you. And then I suppose the main bit of growth we've gone through was in 2018, when we went from our small shop to our sort of small supermarket scale thing that we have at the moment. And for that, we had to raise quite a bit through different strands. So key parts there was putting together our big plan, which was our aspirational document to create this supermarket. And in there, we sort of launched a crowdfunder alongside that, but also loan stock bonds, which were really asking our customers and supporters for small investments, small loans. So with that, we asked anyone to invest anything over £250 with us, to choose the interest rate that they would like for that, from 0 to 6%. and also the term of that loan, which I think was from 1 to 5 years. In our document, we outlined the average we were looking for, which was 3% over 5 years, I think. And we got about that on average. We raised 80,000 through loan stock bonds altogether. Kind of alongside that, we worked with First Port again, who have been a partner that's helped us quite a bit over the way. They had a program, or have a program called Launch Me, which matched fund private investment we could attract. So the loan stock investments combined with 50,000 loan from a private investor was coupled to give us a match investment on that, and that alongside 100,000 from Zero Waste Scotland to implement zero waste procedures, and a program of events allowed us to open up what is now our shop. So we're beginning to pay back our loan stock investors and have a good bit of, putting interest back into lots of small investors in the local area, as well as giving them their money back at the end of the term. I guess in terms of what's next for us, we've been running the shop for 2 years. We've been improving our processes, getting ready for a next stage of growth, which I really see as we've now got this new model, we're ready to roll that out. So looking at opening more locations similar to our current store, looking at double-digit number of locations over the next few years. That plan has been set back a little by COVID. We're playing that by ear, seeing what happens with the economy and the likely recession we're going to face, but that's still very much the plan. So in terms of progress towards that, we're hoping to open our first additional store at the end of this year through a mix of low-cost lending and council grant. And yeah, aspirations beyond that is building the whole infrastructure besides that. So things like working with the market we've got to allow our suppliers and our local businesses to invest and grow in their operations, and looking at increasing our own capacity to grow local food. So, in the not too distant future, perhaps buying a farm and using that as a base where we can have our distribution warehouse, commercial kitchen and offices and that type of thing. And we're hoping we can kind of finance this through more low interest loans, looking at more private investors through loans, and also through loan stock. I think that a sort of really good thing about loan stock and crowdfunding is that you're building your support base and you're building the network of people who want you to make things happen and want to achieve, and they become really loyal customers as well. So you're building a whole movement which just gives strength to it. It gives people more ownership and makes a movement. At the end of the day, we're trying to change the way the food system works in Scotland and provide a template there for, I guess, how business should change. I think I'm got very strong beliefs in social enterprises, the model in which businesses should run. I think every business should be a social enterprise, and we shouldn't let shareholders enter that market, I suppose, as well, just following up from the last comment. So interesting to hear other people's thoughts on that and answering questions on it shortly.
Thank you, Reuben. I think it's interesting, I guess, looking at the two different journeys from both yourself and Alan, and there's a few similarities, and perhaps just to pick up on a few questions, because I know we're going to do the questions because I know Alan's got another meeting at 3 and we want to maximise his input as much as we can. So I wanted to start with the crowdfunding, really, and you started to touch on it, Reuben, but it comes up a bit when we look at the community shares approach as well. As what is it that you think you get from that crowdfunding approach in the early stages that goes perhaps just beyond the finance? So are those people that originally invested still with you in terms of customers, in terms of supporting your business? And if you have gone out and done kind of follow-on crowdfunding, or if you did, do you think they'd come in again? So I'll just, given you're unmuted, Reuben, if you answer first, and then I'll just hand over to Alan just for a perspective on that.
Yeah, absolutely. I mean, I touched on that a little bit, and I think, particularly in early stages or in stages of change, um, crowdfunding is so important, both as a means to raise that money, but also to get that buy-in, and also for a retailer like us to generate that repeat custom. So, and a lot of that's around how you use rewards as well. So a lot of the rewards we've used have effectively just been paying for an item up front. So, for example, we've had people, our reward might have been a box of eggs every week for a year. So, that person's going to come in most weeks for a year, and hopefully they're going to buy something else while they collect their free box of eggs. So just using that as a hook through which, I guess the corporate term would be sort of generating new leads and generating buy-in and getting people to talk about these things with their friends. So that was vitally important for us as a small business with no marketing budget.
Thanks, Reuben. Alan, have you found that some of your kind of early supporters on those kind of reward-based crowdfunds are all still with you? Were they excited when you launched new beers?
Yeah, I mean, they're basically our mailing list as it stands right now, and they've been hugely supportive, particularly when lockdown started, ordering online with us. Totally agree. Like, it effectively is, it's allowing people to self-identify as your current and future customers. Like, they're literally saying, we want to support you and we want to buy from you. Can you, effectively start that relationship with us? I think it's also massively, to start an idea through a crowdfunding. I mean, very rarely do people, when it's reward based, certainly do they introduce it at a point when the business is at a later stage of growth or maturity. It's effectively like a validation thing. Is this something some people will pay for? And you get to sort of test that opportunity to say, well, yes, they will. I mean, I can't speak in Reuben's case, but what we were asking people to do was buy beer they'd never tasted from a brand they'd never heard of 3 months in advance on a really dodgy website, or dodgy looking website. It was perfectly legitimate, but we are asking them to do quite a number of things before they would ever get that beer, and one of them was to pay in advance, and I think that's crucial. But then I think that also leads into when we went to CIS, for example, after that crowdfund, we could say people want this. People ultimately will come and identify with us to pay their money in advance. So I think it's a massively validating thing for going on to seek further investment, for sure.
Yeah, I guess it's a kind of proven market research in essence, rather than just a theoretical market approach. Do you think there were any negatives to going down that reward-based crowdfund approach? Perhaps Reuben quickly, and then Alan, and then we'll touch on some of the stuff around the loan investment and the partnership side.
I think it's just making sure that you've costed it out, so your rewards don't, you have the money you need at the end of it, because rewards cost money. So you have one end where you can free up a lot of money through a crowdfunding program if your rewards don't cost very much, but you reduce uptake of it. So I guess it's a bit around that. Also, ability to deliver. There's been sort of crowdfunders where we've there's one where I think we promised people an opening ceremony in our polytunnel or in our market garden, and by the time the crowdfunder finished and we'd done it, it was November and it was freezing, and we just had to sort of say, well, do you want a gift voucher instead, because this isn't going to be very pleasant for you.
Yeah, so really thinking through that reward structure.
Yeah.
Alan, any negatives you found?
Yeah, I mean, like, that last bit is absolutely accurate. I mean, like, we thought we had to be like completely over elaborate. You could have I ended up having a sit down meal for a couple that had invested a couple of £100 or whatever, and you could tell, like, they come, and it was a lovely meal, don't get me wrong, but they come down from Aberdeen for this. It was just a random, it didn't make any sense when you started to read it back. It was a lovely time, but I think even they were like, we could have just bought more beer. You could have just lessened the route to them being able to buy from you, for sure. In terms of also just structuring your rewards in a recurring revenue way. So we used an external platform where people couldn't sign up to receive, you know, a subscription box or anything like that. Like, the more you can identify and effectively, this sounds a bit negative, but tie in a customer to repeating revenue. So for example, I really like the eggs example there, where someone was going to come back to you and constantly come back to you. That's the way I would do it, because, you know, the lifetime value of a crowdfunder for us is actually, you know, how often do they come back, and how often do you communicate with those people digitally or face to face in Reuben's instance, and how much of a relationship can you build up with them. And also to think about, like, that ultimate journey is that they've started your business, like, they're invested in it. So, like, keep them up to date with stuff that isn't salesy. Like, just keep them up to date with stuff that you're doing. And I think that if you can build that relationship when it comes to either crowdfunding again, or doing something more ambitious or more expensive, if you like, then they will also be the most willing people to help you go to that next stage, you know?
Yeah, no, thank you. I know I'm conscious we've touched on crowdfunding quite a bit, and obviously Sis's main business, I guess, is more the loan side, but I wanted to give that broad perspective about investment raising across this kind of field of retail. I wanted to pick up a little bit just on the loan investment side now. So in terms of when you went out looking for loan partners, did you feel were you pushed down a route? Did you have choice? What kind of thing were you looking for from an investment partner? And I guess ultimately, why did you end up kind of going down the SIS route?
So for us, like, there were, I think that Scotland is in a very advanced position. Like, we have effectively a social investment bank, which is SIS in many ways. It's super sympathetic to the people that walk through its doors. They have a great deal of understanding that, you know, potentially the financial capability within the organization is nowhere near where it could or needs to be for the long term. And I think that myself, I just thought you just walked in and just said stuff, and, you know, so, you know, the computer says 100 grand, you know what I mean? Like, it really brought me on a massive journey. I think we also, because they're in the sector, they can identify what they think might genuinely work and what could be novel. And then when we went to do our first deal in 2016, the same person was doing our deal in 2019. So you actually have that ability to build up quite a good relationship with people who genuinely care about it. And I think that we have used that experience to go on a bit more of a financial savvy journey. So we have a CFO now, which makes sure that the actual longer term projections are like updated, you know, at the monthly board meeting. When, you know, prior to 2019, it was just kind of, you know, I don't want to make light of it, but, you know, it is kind of finger in the air projections where you go, I think if we sell this and we sell that, whatever. We now have the full, like, levers at our disposal to actually get to grips with our finance. And I think that was probably a lot down to SIS's patience with us to build that capacity internally. But what it's also made us do is to be much more ambitious. So SIS don't know this yet, or at least Rob Halliday doesn't know this yet, but, you know, we're looking seriously at a £1 million raise at the end of this year, which flips our business model, and they will be the people that we go to and speak to first, because they've been on that journey. And especially with SIS Ventures now opening up opportunities to actually really scale businesses. It's a great relationship to start at an early level, even if it is just in the, you know, 5 digits, for example. It's still one that actually could go on a journey with you as well. So I've been super thankful for the opportunities that SIS have presented, hence why I've joined this seminar, to hopefully pay you back a bit, as well as your interest.
Thank you. It's much appreciated, because, you know, we can talk about certainly what we provide, but we always think it's much better if people hear it from the other side, from people who've been down that journey. And again, I think, you know, we know applying for loan finance can be quite daunting for many organisations, and I think that honesty about saying we weren't quite ready and we needed that help, but knowing that actually part of the the selection of a partner is working with someone that actually works that through with people and uses their financial experience to maybe ask questions, to put challenge in, but hopefully to make something be a stronger business proposition and proposal moving forwards. We don't want people to fail either, so it's very much a kind of partnership approach. Reuben, I'm just going to ask, I mean, in terms of kind of Locavore's perspective and looking at social investment, did you go to mainstream providers? Were you keen to go just down the social investment route? Would you do the same thing again? I think that's always an interesting question.
I think, yeah, I mean, as kind of said a little bit, we've taken lots of different approaches. We're a bit of a patchwork quilt of small bits of finance over the years. You know, we've borrowed from CIS on a number of occasions. The first time was almost a bailout loan actually, and you know, the kind of the understanding and the ability to sort of help us through what was a really difficult time for that was fantastic. Also borrowed other small loans of 10 and 20,000 for various projects here and there, and yeah, more recently we were looking at purchasing an asset, and CIS was very helpful in guiding us through that process, asking us the right questions, so we were considering things fully, and at the end of the day sort of putting up the offer to give us a loan to buy an asset which we wouldn't have the sort of the money in the bank or the assets to borrow against. So that's been great. Unfortunately, that project did fall through, but you know, I think that's something that CIS does, but wider in the sector, is just that helping hand in a way which you get less so from conventional lenders. I mean, on the other hand, you know, we've had small bank loans as well, just from high street banks too. So it's picking and choosing what's right at the time and what's on offer, because it's constantly changing the scene for finance for social enterprises. You know, looking at what grants there are, looking at what sector specific stuff there is, and then what sort of conventional banks and the normal business world has on offer as well.
Absolutely. I mean, I've got some slides kind of at the end of all of our speaker sessions, looking at kind of the kind of things people might consider when choosing a financial partner. And that's, you know, regardless of whether you're looking at that being CIS or someone else, what are the kind of questions and things that you might want to ask and question. I'm going to ask one last question to you both before handing on to Rachael. And I guess it's that one of the other things I touched on in the slideshow afterwards is looking at what we mean by investment readiness and how an organisation prepares. So what do you think your kind of learning journey as a business has been around kind of your confidence to raise investment? Do you think that's really changed as you've gone on? And what were the things that perhaps when you first applied for investment, other than perhaps the financial planning and that advice, but were there other bits around governance, around staff that you really had to kind of consider or got pointers towards that you think would be useful tips for other people? Alan?
Yeah, I mean, like, we are in a completely different space. It's taken us a while to get there, but we're in a completely different space as a result of the various things. I think, you know, when you start and you think, you ultimately need to build, when you start off as a social entrepreneur, you know, you need to build capacity within your team. You can absolutely lead it, but, you know, you need to get the money in to bring in people who can effectively make it more sustainable. Then you have more ambitions to go further. But when you're at an inflection point where you actually genuinely want to scale the thing, then I think you really need to take seriously, I suppose it's a governance thing, but it's also just a finance thing, where you have to have somebody ever on your board as a non-exec or within the team, or you have to, you know, skill up yourself to actually go through different scenarios in almost like a CFO capacity. Somebody who can build a model that is you become aware of what things make a difference to your business. Whether it's your product mix, whether it's certain overheads, whether it's, you know, determining what the next phase of growth needs to look like. The more insight you get into the longer term of that, which will come. Like you won't have that in day one. It took us to year 4 to really get to grips with that. But the more you have, the more confident you can feel. You know, you can stop worrying necessarily about the finances, because if you aren't to grips with it, then the finance bit of shall I take on this money, will I spend it there, etc., can actually really limit the quality of your decision making on a non-financial basis. So I think that's important. But I think the whole journey that we've been through kind of has really taught us that you have to be smarter than just, if we get money in, it will be okay. Like you have to then, once that cash hits the bank account, then you have to start thinking about, right, how long will that last us in the worst case scenario? And then how can I refinance out of that in whatever way it looks like? And I think that Reuben is probably much more sophisticated in terms of the different instruments that he's used, which are kind of like crowdfunding, those micro loans, etc. And that might be totally appropriate. There might be obviously community shares, or you might get to a stage like us where you actually have to reinvent a business model that allows equity. But I mean, I, as a 25-year-old walking through the door at CIS in March 2016, would never have thought that I would be in a position to even contemplate that. Like, that has been a journey of learning from myself and making mistakes, and lots of them, to get into the position where actually you think that, yeah, you've potentially built up the capability in yourself and in your business to actually take a big leap forward.
No, I think it's interesting. I think we put so much on actually when we look at social entrepreneurs, and actually how can you be an expert in marketing, in finance, in HR, and actually almost the smaller you are, the more you have to be an expert in everything, and that's pretty hard, and you can't be. So it's kind of, how do you always find people to help you on that journey? Reuben, just any final thoughts from you?
Yeah, I just think it's like you're saying, as you're growing, and particularly a business like us where you have lots of different strands and you're creating and building quite a lot of different things. It's about keeping the business infrastructure up to speed with the business. So, we went through a massive growth spurt in which our turnover tripled in a year, and our team structure didn't change to account for that. So, we've been catching up over the last year with basic things like putting in someone to work on HR for us full time, bringing in someone to work on finance, and just this process as a social entrepreneur of being used to doing everything and then slowly giving away your hats at a rate that your business can afford to do that. Because sort of bringing in specialists can add a lot of value, but there's also that risk of their salary, I suppose, so taking that stage by stage and thinking that through very carefully.
Yeah, the classic challenges, I guess, of business growth, and I know we do quite a lot of work with organisations in terms of looking at that. So, in fact, I'll touch on that a little bit when I introduce Rachael in a second, in terms of another programme that we're currently promoting. So, I'd just like to say, I check we've got no other questions have come through. So I just wanted to say thank you both for your contributions today. I think it's really helpful for people to hear that side of it from people who've gone down the investment journey route. And it's great to hear about the ambitions for the future as well. So look forward, I'm sure, to the team hearing more about that.
Yeah, and maybe people haven't necessarily put a question in the group for whatever reason. Just reach out to me on LinkedIn if you have any questions about it, and be as prepared to ask silly questions as possible, because I still am asking lots of silly questions, because it's better to just find out the answer, I guess. Yeah.
Never be afraid of the silly questions. They're often the most enlightening ones, I think. So I've been a champion of silly questions for years. I've probably asked a few today. Thank you both.
Thanks very much.
Great to have you with us. I'm going to hand over to Rachael now. So Rachael is founder and chief executive of Future Economy and the Creative Entrepreneurs Club. Actually, is also quite well linked in with CIS in terms of being convener of our Retail Academy. And for those of you who've been interested in that kind of journey about ambition and really trying to grow your business, she's also going to be leading on another CIS initiative looking at recovery ambitions, and I think the deadline for applications for that is Friday. So I'm going to do a plug for that before you start, Rachel. So I'm going to hand over to you now to just talk a little bit about kind of just the retail sector generally and that social aspect that I know you've always got loads to speak about, and we'll give a bit of an insight into what the CIS Retail Academy is all about as well. So thank you. Over to you.
Thank you so much. Well, that was just brilliant. I love hearing about everybody's journey, and Alan actually was on the very first Retail Academy, so it's amazing to listen to all of the steps that have been taken. So I want to cover a couple of things today, and first of all I need to apologise. I'm on my phone in my office, and I've had a classic moment where I tried to be super organised and everything fell apart. So if this is a little weirder than a normal webinar, I'm holding on to you all very tightly through the power of my mobile. But I want to touch on three things today. I want to talk about customer, which is my favourite subject of all. I want to talk about product as well, and the way that we view product and the way that we can invest in product. And then I'm going to talk a bit about the Retail Academy, and feel free to ask any questions at all. And similarly, after some of these sessions, it's quite a lot of information to digest. So similarly, if there's anything that you want to know about, just reach out to us at the team at Social Investment Scotland, and we're more than happy to answer any questions. And I would actually also caveat that yes, there is no such thing as a silly question, but also when you're asking a question, be specific, absolutely specific. If you want to know something really focused, make sure that you ask it. Don't ask to pick anybody's brains, because that's the one that people never have any time for. So customer, where are we with our customers? And actually, when you think about it, any business that wants to thrive and grow needs to know who their customer is. And very often I spend a lot of time with socially motivated businesses, social enterprises, purpose-driven businesses that have come up with an idea for a product that they want to sell to achieve something. Now, the product that they want to sell might want to achieve employability, or it might want to achieve an impact environmentally. Who is going to buy that product? Now, inevitably, when I ask that question, people always come back with, well, I know exactly who's going to buy it. I'm going for the Waitrose customer. We're high end. We're going to be focused on this particular person. They have this particular income, and they have this particular shopping habits. Now, actually, inevitably, we don't know enough about that customer. And those customers are very hard to come by. I was reading a brilliant article the other day in the newspaper. It was the Financial Times that have been doing some incredible insights on customer behaviour at the moment. And apparently the biggest spenders in our economy at the moment are 16 to 35-year-olds. They're spending more sustainably, and they're spending more frequently, and they're spending with a bigger purchase. So my first top tip when we're thinking about customers in our world, as in the socially impactful world, is do not spend or buy with your own wallet. Now, those of you that have heard me speak before will know that that is probably the only thing I say. I only really have 3 things to say ever in the whole world. But that is one of my favourite things, because we have a tendency to downplay our understanding of customer in the social space. We don't do enough research, we don't do enough trend spotting, and we don't do enough understanding of where the pinch points are and where the spend points are. So for you and for I, £15 for some beer might be a huge amount. However, for somebody else, £25 might be entirely appropriate. So do not spend with your own wallet is the first top tip. The second top tip when we're thinking about customer is understand your customer from where they are at. You need to really look at people's behaviour. You need to look at people's notion of spend. So what I mean by that is, if you think about the current climate that we're in a new normal. But what is becoming more and more apparent to people are valuing time, people are valuing quality, people are valuing sustainability. Quick fix is not what people are looking for. So people need to be reassured that they want to get the quality and the level of product that they aspire to. So understand people's behaviour around you. That'll have a big, big impact on the way that you do your research. Now, the third thing around customer is absolutely knowing product. You can't sell somebody something that they don't want. And this is what brings us into product and then coupled into the Retail Academy. About 5 years ago, myself and Alistair Davis, who's the Chief Exec of Social Investment Scotland, were having conversations around all of the brilliant services that were going on in the social enterprise world. And it kind of became clear to us that there was a massive opportunity in the product space. We did some research, we did some investigation, and we found, and this stat has not changed, this stat is consistent over the last 5 years, that over 90% of consumers who buy within the retail space, largely supermarkets, want to buy social. They want to buy sustainable products. They want to buy products that are well crafted. They want to buy products that have a social supply chain. But they weren't available, and they weren't an understood entity for the supermarkets and the retail spaces. What's interesting, if you think about your own behaviour, again, coming back to understanding customer, is that when you are rushing into Asda or to Tesco or to Sainsbury's or to Marks and Spencer's or to Waitrose or to Aldi or to Lidl, how many are there? You're rushing in to those places. You grab what you need. You often don't look at messaging. You often know exactly what you want. Eggs, milk, bread, whatever. The 3 aisles that have the most customer in it, and I think this has probably changed. I need to get back onto my COVID research because I suspect this has changed quite considerably. But the 3 aisles that have the most occupation in them are the bread aisle, the milk aisle, and the alcohol aisle. Now that is a UK phenomenon, not just a Scottish one. The alcohol aisle is the time we spend the most in there. So I am delighted that Brewgooder are in those aisles selling socially responsible beer. I'm also delighted to see that Heroes Vodka are in there and Generosity are in there and a whole host of others, but please do drink responsibly. But actually, how do you understand what product you want to buy? So that's where we got really excited about the Retail Academy. And just to kind of touch on Product and Retail Academy, because they're intrinsically linked. The Retail Academy is where we've teamed up with a whole range of mainstream retailers who want to have social products on their shelf, but they don't know how to go about it. And we want to bring socially motivated, purpose-driven, social enterprise products to the mainstream. There's a big, big disconnect there at the moment. If you can sell 3,000 or 4,000 units, that's brilliant. But what happens when the cooperative want 50,000 units? How do we understand the scale? And what can you do exactly with the scale? Now, what was really interesting, both Alan and Reuben touched on that. They touched on what happened when Reuben talked about his turnover tripled. Alan's talking about actually we needed to scale. We need to think differently about how we can create the momentum to feed back into our mission-driven piece. What happens if you need to have the logistics behind you and the supply chain behind you to grow and scale, and you just don't know the detail about that? So that's essentially what we do at the Retail Academy. We look at trends, we look at product development, we look at the retail space. Classic story from a couple of years ago where people had created a brilliant drink, couldn't sell it on the supermarket because it was too big for the shelves. Nobody had measured the shelves. Really simple, insightful, focused things that will help get socially motivated products into the mainstream. And that's one part of it. The second part of it is truly understanding the messaging that needs to go with that. Controversial moment coming up, Klaxon, socially motivated product. Even after everything I've said and even after everything Alan and Reuben have talked about, do you know what? Nobody cares. Nobody cares that you feel really passionately, and I'm on this bus with you people, cares really passionately about a socially motivated product, that the sausages are coming from a well-farmed place, that the beer is supporting clean water in a whole range of different places. Nobody cares about the story. Be very, very clever in how you do your marketing and how you do your communications. That is one of the things that it's been the most powerful aspect around the Retail Academy. Understanding customer, understanding the product, and understanding the messaging and the stories that you have to create around it. The other thing that we do at the Retail Academy is that we bring a sense of cohort. There is a whole range of different shared opportunities within the Retail Academy. There are a whole range of shared understanding about pitching, about investment, about what can we double up on, how many staff do we need to explore this, what kind of supply chain do we need to explore that. And I think that's one of the hugely beneficial parts. It's really interesting. I spend a lot of time in the commercial sector, and the commercial sector always works in partnership. One of the most bizarre days of my life was being in Asda head office with 30 suppliers of sausages, all working and learning and understanding together about how to get on the shelves with Asda. I can't relive that day. I can't even go into it. But if you want to have any insight about the do's and don'ts of sausage making and purchasing, then I know everything there is to know about it. But what's really fascinating was that lack of collaboration within our social space. And that is something that going forward, absolutely, now that we're in a new normal, we have to get better at. So a crucial thing about raising investment, if you don't have any customers, you can't raise any investment. If your product isn't good enough, you can't raise any investment. And so I hope that what we do in the Retail Academy brings some of those things together, and it enables you to think through the entirety of your supply chain in doing it. One of the biggest issues around socially motivated products not being listed in big retail spaces is that simple, straightforward admin. The admin is never good enough and it's never up to scratch. And that is one of the first things that we learn about how to get your house in order and your ducks in a row. So in conclusion, never spend with or purchase with your own wallet. Understand the relationship between customer and product. And if you want to learn more about being part of a kind of momentum, if you like, around socially motivated products being in mainstream retail spaces, then do apply for the Retail Academy. I'm not sure if we're allowed to say, but we're doing it in October. It's going to be totally awesome. We've got new people coming with us. We've got new approaches. And one of the things that's hugely important at Social Investment Scotland and in many organisations that I work with is that the focus on rebuilding the economy is centred around socially motivated products, services, and social entrepreneurs. We have a massive opportunity to get this right. So I would urge you to think seriously about your investment routes. I would urge you to think seriously about your product placement, your product development wheel, and also the trends attached to that. And also think seriously about truly understanding who your customer is. It's never who you think it is. It's absolutely not your mum, even though she might be desperate to buy all of your products. It is much deeper than that. And also, my final point is we now are global. Look at us chatting here today. There is no reason why we can't upgrade, upskill, and really get on top of the e-commerce platforms that we all need to live and work with now. And there are a huge range of investment opportunities there. So I hope I've given you a flavour of don't be scared of investment. It is not a challenging environment. You have friends around you that are able to take that forward with you. But what I would stress, like Alan and Reuben both said earlier on, be smart about it, do your homework, and get with the programme. Over to you, Nat.
Thank you. I was expecting that to be upbeat, and it was. Thank you, Rachel.
And on time.
I wasn't necessarily expecting that. Thank you. Do you know, it really interests me. I think we spend so much time because we operate in this social sector. We hear these kind of 90% of consumer stats. I think, God, this is amazing. It's changing. And it's always that. Actually, we also know, if we're really honest with ourselves, does 90% of the way we spend our money always have that social ethos in mind?
Absolutely.
And I think it's always very much like it's sometimes also, and at the point you made about look at behaviour, it's like people will tell you what you want to hear. If you really want to understand what people are going to do, look at what they're doing, not what they tell you they're going to do, and really making sure you understand the difference between those things.
Yeah, absolutely. I used to work in the music industry, and I always used to say to people, when I'd go and see a band, if the audience was full of friends and family, I'd just walk out. Now, my kids are involved in music, and honestly, they're amazing. However, they could never sell a record. And that's the other thing about the space that we operate in. Often we're always championing ourselves, and we will all buy from each other, and that's great, but that's not the customer. That's not your customer.
And that's also not going to give you the scale. If you want that ambition, you've really got to try and understand that. And I think it's interesting. I did a piece of work looking at some of the stats, even around kind of fair trade and what made people really buy fair trade. And actually, it wasn't that suddenly everyone decided fair trade was good. It's because it was easy to buy. As soon as it went on supermarket shelves, it was easier to buy. And people would do it, but only if it easy. So convenience still plays such an important
it's a massive part. And I'll tell you the other thing, and I'm mildly / completely obsessed with these kind of things, but one of the other things that fair trade did really well, and then they were allowed to do it, was that they fought quite hard to get it eye level on a shelf. So if you think, yes, it's about convenience, but if you walk into any supermarket now and you look at the shelves of coffee, you will see that Taylor's have a shelf of coffee, Fair Trade have a shelf of coffee. Fair Trade fought really hard to get in that shelf that is your eye level. And if you look at all the packaging, they're all the same colour, except for Fair Trade Cafe Direct Machu Picchu, which is green, and it's at eye level. So if you're in a rush and you're in and you grab that and you go, these are things that the level of detail absolutely matters. And it matters because it gives you an insight into how people shop, how people behave. And we only spend 3 or 4 seconds in those aisles. We spend 9 seconds in the booze aisle.
I'm not commenting on that. You can mostly find me in bread and milk. That's all I'm saying. Thank you so much, Rachael. The Retail Academy really is worth going on. If you're a social enterprise in that retail space, I don't think anyone else in the sector is really doing that kind of focused work, trying to really encourage people to scale businesses in that area. So I'd definitely encourage you to go on that. In its new date when that gets announced.
I know I'm such a spoiler, but I can't help myself. But I should also just point out it's the only Retail Academy in the UK. So we actually are 4 nationwide. So we really are leading on this space. And, some really big household names, Brewgooder, Hey Girls, Heroes Vodka, Shetland Soap. There's a whole bunch of people that have come through the Retail Academy, and the alumni will be joining us as they always do, and when we talk about their journey. So I think it's really important to understand and to learn from that. And if you think about the amount of products that are being sold in the new normal online at the moment, being able to be part of that new movement, a new retail space, there's a new retail trend emerging. And I think we've got a really big opportunity to capture the imagination of the nation, really. So people should really start to think in a much more ambitious way. And I hope that you get practical skills and ambition from the Retail Academy. So please do join us.
Great. And I've got one last question just about the Retail Academy. Obviously, it started very much in kind of that alliance with Asda, and I guess we spoke about how Brewgooder went on to kind of look at that from a supply chain. Is the stuff that smaller organisations who aren't necessarily interested in the supermarket scale approach could still get from the Retail Academy?
Absolutely. And actually, that's one of the best things about it. So lots of people come into the Retail Academy thinking, right, I need a new website and I'm going to supply Asda or Sainsbury's with $3 billion worth of product. And actually, through the learning, through the journey, through the really crucial insights about customer, about supply chain, about logistics, people come out and say, actually, do you know what? We should be working with Dobie's Garden Centre, for example. We're that type of product. Or we will refocus and try and get into John Lewis. Or we will refocus, and actually we're more of an Aldi product. I mean, Glenvevis gin, the first community-owned distillery of gin, is doing great guns in Aldi, Lidl. They sell out every time they're in, and it's 35 quid a bottle of gin, but it's got an amazing amazing branding. The story is fantastic, and actually they had a brilliant relationship with the retailer, so the retailer's given them an extra shelf, so you go in and it's packed with their stuff. And if you think about the other gin next to it, it's like maybe £9 or £10. I have to confess, I do get mildly followed around all of these stores because I'm in taking pictures of all the socially motivated products that have been on the Retail Academy to make sure that we're keeping an eye on things. But it's about having the right information to either discount or enhance your offer. And that's the thing that's really important, is people think that they're going through the right kind of logistics for supplying 180 stores. We go through that in a lot of detail. We talk about the challenges of getting it right and getting it wrong. You get one delivery wrong for any of the major supermarkets, the chances are you will be delisted. So how do you really get your head into that? So we've got a whole range of different retail partners on board now, from very large to actually very small. And then some retail partners, Reuben was on last year's Retail Academy helping with the pitching, because he's always looking for new product. He's a growing business, and he would be in the retail space considered a small partner, but he's a hugely influential and significant partner. So I think it works for everybody. I think what it gives you is understanding who you are, understanding who your product is or what your product is, and understanding growth potential, logistics, supply chain potential, and who your customer is. And it is the most bonkers 4 days of your life. I'll just throw that in there. I don't think anybody wants to spend 4 days with me and et al. From Social Investment Scotland, but you know, we've done it, we survived.
And people have made success from it, and I think that's the important thing, is if it gets you results, then sign up for it. There's so much business support out there, and actually focus on going on the right one for you is the other bit of advice I always give people. There's a lot of it, it's all free, that's all great, but you need to balance your time between what support you go after and what time you actually spend in your own business, and work out the bit of support you want to follow and really chase. That's
totally. And we would not do this if it wasn't successful. We've got no time. I've got no energy to do things just for the sake of doing them, none whatsoever. So it's got to be impactful for the enterprises, or else there's no point really.
Thank you. That was such a great introduction, I think, to the Retail Academy. Thank you so much. And I guess I almost feel like I'm going to be taking us back down a level now when we start to look at a few slides around the investment side. But, you know, some of the same stuff's true, I think, even around the investment is, you know, you've got to work out what's right for your business. For some organisations, they might only ever stay on grant funding. Realise the limitations of that, realise why you're doing it. Go for it if that's what you've decided. If you're going for scale and you want to use the loan finance route, work out what it is that you're going to need to be able to really attract the loan finance in to meet those kind of investment ready things, to work out where you're still missing some skills and go for the right thing for you. Because actually this is I always say this, and I'll come on to this I guess in some of the slides, but when you're looking at investment, it's not a grant's the right way or loans the right way. It's what's right for your business. Isn't an either or approach. It's a real mix, and that can really vary from organisation to organisation based on your ambition, based on what you do, based on the social impact you're trying to make. So it's working out the right thing for your organisation.
Totally. And can I just make one last point on that, Naomi, because I think it's a really important one, and Alan touched on it around the right type of investment at the right time. Very often in our sector, and I mean that in the broadest sense, we're trained to ask the wrong questions. So when somebody says to you, how much money do you need? The answer is, how much can I get? And it's like, no, how much do you need? It's like, how much can I get? And that has to change, because you're right. You may always be on grant funding. Fine. You'll always need investment to grow, like Brewgooder. Fine. So what is it do you need that for? And it's not good enough just to say it'll be okay if we get the money in, because actually, you know, your business model might be needing revitalised. You may have the wrong staff, and I spend a lot of time with social enterprises who are working with clients who are trying really hard to upskill them, and they've misjudged the length of time that takes. And so you've got to do all of these things in a really robust way. It's not good enough to say when the money comes in. The biggest call I get is for people to say, I need a new website, that'll help my sales. No, Understanding your customer will help your sales. And it's the same thing with investment. I need the money that'll help. No, you need the right money. And so helping people to get, that's what Sis is so brilliant at, helping people to get on that journey to understand what is the right money at the right time for them. And then things just start to flourish.
No, thank you. I mean, it's always been my thing. I know when I used to work in the startup social enterprise kind of finance side at first, but and marketing was always the classic. People come in and they've designed a budget, and actually they've not designed it based on what they need at all. They've based it on what the total amount is. And sometimes I kind of go, but you've got this great project and this great idea and this great new product and service you're launching, and you put 200 quid in for your marketing budget. I'm like, it's not going to work. I'm like, slash the bits that you've put in excess on that actually is fluff and you don't need right now. If you can't sell this, it's all a waste of time. So it's actually helping people understand what they need that's really important, I think. So thank you so much.
Cool, you're welcome.
I guess see you soon. See you at the Retail Academy.
Yeah, have a lovely time.
Brilliant. Thanks, Rach.
Bye.
Bye. So I guess it's for me now to look at the kind of just the more detailed bits that have come out of our session in terms of, I've got some slides just to go through in terms of looking at investment, looking at it in terms of what we mean by investment readiness. A few of our speakers have touched on that. So I'm just going to pull up some slides and just talk you through a little bit of that. If there's any questions as we go through, feel free to pop them in the chat function. So we've already heard from a few of our speakers around how social investment loans, I guess we always call it social investment generically, it tends to always mean loans in our sector. I think we touched on that a little bit when Alan was talking around, looking at it, can we use equity, looking at different models. Generally speaking, because equity has been harder because of legal structures within the traditional social enterprise sense, the money that we talk about in social investment terms here is loan based. There are some different examples around that, and we're going to touch a little bit on community shares and I guess the crowdfunding stuff that's already been mentioned with Toby at the end. CIS has generally done the loan investment. We've been going since 2001 and have invested over £80 million to date in 400 plus organisations. They've used it for a real variety of things. So we heard Reuben talk about how we helped in terms of looking to buy an asset, so looking to help them build premises. And we heard Alan talk about working capital in terms of looking at his business and what he wanted to do and what he wanted to achieve, and needing access to that money to actually help him deliver on that and build his business. Bridging grants are a different reason, and that's perhaps not what I'm going to touch on today, but in essence that tends to be organisations that are more grant funded but need access to money now because they can only claim money back once they've actually done the work. I've put a few links as we go through today's slides just to some video clips that we've prepared that pull a bit more detail around each of these sessions, so you can go on and look at those in your own time if that's the bit of work that you're interested in. So really we're looking at using loans to invest in your business, to grow and scale your business, and sometimes to just diversify what you want to do, whether that's adding new product lines, whether that's scaling up to more customers, scaling up as a result of having new suppliers and people that you're supplying to. So really looking at that across the board for organisations. I wanted to touch on kind of next steps and actions, and I'll go back and look at a little bit of the detail because I think this is where we'd really come to based on our presentations. So we heard Alan and Reuben really talk about their investment journeys, and I guess talking about how perhaps when they first came into CIS in this instance, they were perhaps a little naive, they needed to do a bit more work. And one of the bits of things that we do is I always say to people, we're not just about providing the finance, we're very much about that hand-holding and that support, and actually we help organisations look at kind of what it means to become investment ready. So I've got a link on the next slide to a diagnostic tool that sits on our website, but in essence it talks you through these 6 key areas of looking at your business in terms of asking some key questions perhaps on how well you're doing in each of these areas. So how focused are you on social impact? How strong is your governance structure? Have you got the right people on your board in place? Rachel's already really touched a lot around products and services, and started to talk about, again, how a lot of the work she's been involved with is helping organisations really look at, have they got the right people involved? We always say when we're looking at making investments, we're investing in the organisation, but actually in the people that sit behind that organisation. So we want to understand people's skills base, people's ambition, people's drive, and really try and understand what it is that they're trying to do. Because if we can understand what people want to do, we can work with them to help them with that achievement. And sitting behind all of that will be the business plan, the sales and marketing, and really having a good idea of what it is that your organisation's trying to do and working that through with you. Perhaps being that critical friend at times in terms of asking some of the key questions. So we want to invest in organisations that are going to be successful. Part of the thing around using loan finance, of course, is you have to pay it back. So we want to really understand people's business and people's ability in terms of earning income and being able to do that, as well as meet their social impacts that they've set about. And we'll also talk people through that kind of financial controls. And I guess you heard Alan speak about looking at how they developed their finance base as an organisation. They've now got a chief finance officer. They didn't have that when they started, but how have they developed over time in terms of looking at some of those financial controls that they've needed to have. So the link to the diagnostic tool is on our website, and when we send out the slides after this session, all the links are in there so that you can click on any of them and really work through this. I always say, regardless of whether you're going for loan finance or the investment you're looking at is a community shares model or just simply grant finance, this is a really helpful way of doing a bit of a business health check for your organisation. I wanted to touch a little bit before handing over to Toby as well about that sense of it being a partnership and how do you choose an investment partner. So I guess one of the key questions we often get asked when people first come to us is always about interest rates. And of course, cost of finance is an important aspect of choosing an investment partner. And I guess if we're to turn it even and looking at that customer approach Rachel was talking about, when we go out as a general consumer, cost is always important in what we're doing, but actually we're always looking beyond the simple costs. Otherwise, people probably wouldn't buy fair trade. So we're always looking at not just the cheapest, but actually what goes beyond and what are we getting? Where's the value for money rather than simply the financial transaction? So I always get people, yes, rates are important, but actually think about it beyond just the cost of finance when you're looking at a partnership. Partnership to me in this sense is much more than just the money. So I always think what's provided beyond just the financial stakes, where is that kind of that hand holding that you might get, that access to expert advice and opinion, the business support aspect. What is there about volatility? We always kind of think in terms of volatility from a lending perspective, in terms of who we're lending to. I think it's actually just as important to understand about volatility in a much broader sense of who you're lending money from. We heard Alan talk about how actually the person he approached for finance a few years apart was the same person. So even in terms of staff volatility, smaller organisations, perhaps you had that relationship with a particular person, so the people were less changeable. I think we saw when things like the financial crash happened in 2008, we had the business sector and the finance sector itself changed quite a lot. So understand the volatility and the business perspective of the person that you're trying to lend money from, as much as, again, just the money, as well as understanding your own volatility. And I always say understand your own. We talk a lot about business planning. I've yet to meet an organisation whose business plan went exactly as was intended. Everything was just as they planned, just as they foresaw. There's always going to be changes. And I think, again, when you're looking at choosing an investment partner, the other thing that's really interesting is, have you got a partner that can do that flex with you when it's needed and when you're going to need to just change how that operates a little bit? So if you've got a very rigid partner and you need to change, that could be more difficult from a kind of investment perspective. So always think about your own volatility and the business that you're lending from in terms of how they look to work with people. And the last one, I guess, we always say social investment to some degree came about because in the earlier days of social enterprise, if you went to your high street bank, traditionally the answer was probably no in terms of investment. They tend to want to offer based on security. CIS and social investors will lend money unsecured. They'll tend to lend smaller amounts of money. So actually, sometimes you might have a whole list of people that you want to be your investment partner, but actually when you do approach them, they may not want to work with you. So again, part of the choice of an investment partner is also who will lend to you, who's got the faith in you. You actually want to lend money off someone who's got the faith in your ability to deliver as much as well, I think. And then I just wanted to just touch before handing over to Toby, just in terms of if you wanted to look at loan investment, and this is very much the case with most social investors, it is all relationship based. With CIS, it starts with a phone call, often a conversation, a call, an email, and hooking you up with one of our team. We very much like to work with people in terms of developing proposals. And again, perhaps touching back on the comments Rachael was making about helping people understand what it is that they need, not just what they can get. We're about making businesses successful, not just, and that's very much working with them then about what they understand about what they're asking for and the difference it would make. So it's very much an alongside an advisor. And then, of course, it will have to be considered by an investment committee, at which point it could be approved, declined, or it could be that it simply needs more work. And again, I've put a few video links just onto this slide, just in terms of looking at kind of what we would look for in terms of a business plan. Obviously, if you're coming in for a £10,000 loan, we might expect not quite as much as if you were coming in for the £1 million loan. Our largest investment's been 1.6 million, the smallest was 10,000. So we offer across that range and would obviously look for information accordingly based on what it was that you're asking for. So I'd encourage you to look at those kind of videos and top tips. And when we send out these slides, again, there's lots more information just at the beginning around just who different social investment providers are. We've got some links to the Good Finance site in the slide pack for you, so you can really go on and do some of that investigation yourself too. So I'm going to hand over to Toby, who's just going to talk us through the community shares model. I'll stop my share now for you, Toby, and hand over. So he's really going to talk us, we heard a bit about crowdfunding, but he's going to talk us through kind of a little bit around crowdfunding, but how community shares really is a particular form of that. So over to you, Toby.
Perfect, thank you. Can everyone see that screen? Just say in the chat if you can't see the screen, but hopefully it's working fine for everybody. And yeah, it was really interesting hearing Alan and Reuben speak about crowdfunding so much, because it is a space that we sort of operate in. Community shares really fall under the umbrella of crowdfunding, and as much as that is our area of real expertise, we do also offer some basic advice on crowdfunding. So my slides today don't have a huge amount on that, but very happy to chat. If anyone would like to speak about crowdfunding in more detail, please do get in touch, and we'd be happy to help you with that. So community shares, crowdfunding really is the best way to describe what community shares are. We think of it as a way for people to invest in things that are important to them and that they want to support. So an organisation would put together a business plan, it would put together a proposal, something that it needs to raise money for, and it would then ask the people that that support that organisation to invest their own money into making it happen. So the slight difference between this and crowdfunding, as you might be more familiar with it, is that people are investing money. It's not a donation. It's not something that they get a reward. Well, they can get a reward back for it, but they don't just get a reward for it. They would actually own a share that they can eventually claim their money back from. And they also receive some membership and voting rights so that they have some influence over the organisation. So this is a really flexible form of finance. It can be used to fund anything that you can make a business case for and convince a community of people to invest in. So what's relevant today is that we've worked with a lot of community shops in Scotland, and there's a really well-established model there, especially for sort of community greengrocers and rural shops in Scotland, but it's very expandable to any type of shop and also to online retail. A few other initiatives that we've seen, a lot of renewable energy projects, and Rachael also mentioned earlier that there's a Glenrothes Distillery who are the first community-owned distillery in Scotland. So community shares, these are a quick summary of the real key fact about community shares. So they can only be issued by a community benefit society or a cooperative society. Those are very similar in practice. I think in Scotland, especially with Community Shares Scotland, we tend to see more community benefit societies. The distinction between the two is that a cooperative really exists only for the benefit of its own members, whereas a community benefit society has to demonstrate benefit to a sort of a wider community. So for example, if you are a community benefit society that sets up a shop, you're not just there for the benefit of the people who invest money in the shop, you're also there to benefit anyone who lives in the locality. And you have to sort of demonstrate that wider community benefit. So anyone who buys community shares in one of these societies will become a shareholder. Shareholders have membership rights, and they have the right to vote for the management committee, the people who run the organisation day to day. And people can also stand to be members of that board. That tends to work on a principle of one member, one vote. So regardless of how much money somebody invests in the organisation, everybody has an equal say. So if you put in £100 and your neighbour put in £10,000, that person doesn't buy more influence than you would have. It's more democratic than that. One of the key distinctions between community shares and private shares, as you might be familiar with them, is that community shares are non-transferable. You can't buy a share and then go and sell it for a profit. The share itself keeps the same value, and the way that you would get your money back from buying the share is that you would withdraw it from the society. So if you paid £100, you could go back to the society in probably, it tends to be at least 3 years, sometimes longer depending on the business plan of the particular society, but whatever the terms of your share offer were, you could go back after that time and withdraw your share. So if you put £100 in, you'd get £100 back. And societies can offer to pay some interest on shares, so you might also receive a small profit of say 2, 3, 4% interest, and that's just the society's decision, depending on what their business plan can withstand. So community shares, as well as being a really good way to raise funding in their own right, one of the things that's really strong about community shares is that it's a great way to attract further funding, whether that be grant funding or loan investment. It's a really good, what we tend to think of it as the last piece of the jigsaw for a lot of societies. So we've seen a lot of groups who have had, say, grant income from maybe the lottery, from the Scottish Government, from Robertson Trust, and they've maybe had a quite significant part of their project funded, and they've used community shares to make up the shortfall, whatever gap is left. And certainly in the case of community shops, we've seen a lot of shops that have purchased premises mostly using Scottish Land Fund money, which is a pool of money from the Scottish Government to fund the purchase of buildings. That tends to fund 90 to 95% of the purchase costs of a building. And we've seen a lot of groups who've used community shares to make up that final 5–10%, and also to provide the working capital and to purchase the stock and things like that. So community benefit societies, like I said there, you have to be a community benefit society to issue shares as we speak about them here. The reason for that is that these are particular legal structures that are given certain exemptions from financial regulations. So if you were to issue shares as a company or as a community interest company, you can issue shares, but it's a lot more time consuming, and it tends to cost more because you have to go through a much more regulated process. The idea with the Community Benefit Society is that if it frees up that process and makes it a lot simpler. So community benefit societies are registered with the Financial Conduct Authority, and they are governed by sets of rules. And what tends to happen in practice is that you have sponsoring bodies in, sector-specific sponsoring bodies that can put forward model rules, which are essentially templates that have been pre-approved by the Financial Conduct Authority, the FCA. That you as an organisation can just drop your info into, send it off to the FCA and have it approved much more quickly than if you were to do it off your own back from scratch. You can do that, but it would cost you a lot of money, and it would take much longer. So there is a fee involved in registering a society. It tends to be probably up to around £500. That's partly made up of the fee to access a set of model rules, and it's partly made up of charges to the FCA themselves. So it's a small cost that there is some support available for as well. And there's also, it takes a little bit longer than registering a company. I think the turnaround time with the FCA is up to 15 working days. And there's also the time to put together your rules and select rules, but that's something that Community Share Scotland can help with. So community benefit societies really offer all the same rights and legal protections as a company. They can employ staff, they can hold assets, they provide limited liability for members and for their board. They can also be charitable, so if you have charitable purposes and you pass the charities Oscar test, you can be a charitable community benefit society. Also really well respected form of community governance now, so they're compatible with things like community right to buy and community asset transfer. Really anything you can do with a company, you can do with a community benefit society. We do have an option as well to connect with an existing organisation. So if you're already set up with a company or with a SKIO and you want to take forward a specific project that sits alongside that, we, with our colleagues at the Development Trust Association, Community Share Scotland, have put together a set of model rules which help to link those two organisations. So you can't have a situation where the existing organisation has complete control over the society, but we can put in place written links between the two. So agreements about profit sharing between the two, agreements about having set numbers of directors who are shared between the two, and that sort of thing. So I've just got a quick case study here looking at a community shop in Dunbar. This is one of the 7 community shops that Community Share Scotland has supported in the past 3 years. So they raised £64,000 using community shares. I think that was roughly 400 people investing in this specific one. And like I said, this is an example of one that received Scottish Land Fund money. So that money sat alongside a Scottish Land Fund grant. In total, they had almost £200,000 to get up and running. And they bought this existing greengrocer, which had been run as a private business for around 20 years. And they're now up and running. They've been doing some really fantastic work through the coronavirus lockdown. They've been doing expanding their services to offer delivery to everybody, and doing some really great work. So as well as the support that they had from ourselves, they had support from the Plunkett Foundation, who are a UK network of community businesses and really good for community shop support. So if you are interested in a community-owned shop, Plunkett Foundation are good people to speak to, as well as ourselves. And Cooperatives Development Scotland are another body who can offer support with governance. And this one, the Community Carrot, is actually the second community share offer that's been in Dunbar. There's already a community-owned bakery on the same high street. So they're a good example of a community who've sort of really embraced this sort of model. And this is just a quick map showing some of the shops we've worked with. So quite a spread across Scotland now. This is actually a quick preview of our new website, which is going live tomorrow. So if anyone's really interested, we've got our existing old website still live at the moment, but at some point tomorrow, this one will go live, and it'll be a nice new modernized website that will hopefully make things a lot more accessible for people. So please do check it out. The details are at the end of this presentation. So Community Share Scotland ourselves, we were set up by the Scottish Government with funding from the Scottish Government and the National Lottery. We've been around since 2014, and our purpose is to raise awareness and understanding of community shares, help people understand how it all works, but also to offer sort of direct support and guidance to groups who want to raise money this way. So we have a team based here in Edinburgh who do early stage support with you. We would help you to work out if community shares are a good option for you, help you understand how it all works, help you kind of decide whether it fits for what you're doing. If we both decide that it's a good, sensible option, we can then bring in funded consultancy support to really help you drill down on the detail and put together the detail of your plan. So that would be looking at your business plan, it would be looking at your community engagement strategy and thinking about how you're going to market this to the people who you want to invest. We would help you to look at your governance, so thinking about registering your society, thinking about getting your board in place, and all that comes together into the share offer document, which is the document that goes out to people that hopefully gives them all the information they need to decide whether or not to invest in your project. We also have a grant available to help with the promotion of community share offers. And we have good links to various other organisations. So we're part of the Development Trust Association, DTAS. We work really closely with them. We work closely with the Blunkett Foundation. So we encourage people to get in touch with us as early as they can, and we will help signpost them to all the support that's available and make sure that they're sort of going down the right path. And I think maybe part of the most important thing there is that it's all fully funded. Everything we do is at no charge to the groups who access it. So that's really my quick fly through of Community Share Scotland. Very happy to take questions now. Also happy for anyone to get in touch on those details there. And like I said, please do check out our new website when it goes live later this week. Thank you. Any
Thank you, Toby. That was great. I got just perhaps a couple of quick ones. Obviously, to some degree, our session started today with people talking about kind of crowdfunding. Could you just maybe just touch a little bit on what you think the difference is between kind of a generic crowdfunding approach that we heard of at the beginning and the community shares? What do you think the benefit of going down the community shares approach is, rather than perhaps just the broader crowdfunding approach?
Yeah, so I think crowdfunding, I think there's really 4 categories of crowdfunding. I think the ones that most people are familiar with are at the lower end in terms of how much you can raise. That tends to be the donations-based crowdfunding, where you're just asking people to put money in just because they want to support something. That tends to be lots of people putting in small sums of money, maybe 10, 20 pounds each, and that puts a limit on how much you can realistically raise. You then get into sort of rewards based, which is what Alan and Reuben were mostly speaking about today, which is where you might offer, people put some money in and they get a case of beer in return, or they get weekly eggs in return, and you can start to raise more money with that, but again there's a bit of a limit on how much people are willing to put into something like that. You then get into debt and equity crowdfunding, which is where you see people who are treating it more as a sort of investment, and they're in it to maybe make some money. They're thinking about whether the business plan stacks up. They're thinking about the financial side of it, and that's when you see people invest in big sums of money. In equity crowdfunding, people can put in thousands, tens of thousands of pounds. Community shares sits probably between those two. You can get into big sums of money, but it tends to be people putting in maybe in the hundreds to thousands sort of range. But it is an investment, and the idea is that if things go to plan, people get the money back. So if you put together a solid investment proposal, you can attract big investment and get a lot of money. And I think that's the main difference. The other part of it is that you do build the community ownership, so people are becoming an active member of the organisation, and they have a stake in what you're doing. And I think in a lot of cases that really helps to build the customer base for organisations. We see a lot of organisations who use community shares mostly to build the community, more so than even to raise the money. It's just that they want to have people bought into what they're doing and involved in what they're doing. So you get both sides to it.
Yeah, thank you. I just think people can often sometimes think, well, is this not just a form of crowdfunding? And the answer is yes. It's just working out, I guess, like you say, the advantages. And I think, again, we started off the session today when I was saying, I don't necessarily think it's an either or, whether you're going for grant finance, the crowdfunding community shares approach, or the loan. It's kind of working out what's the right mix within your organisation. For some, it could be always 100% of the grant finance. For some, it's always going to have that balance of the two. And I think it's as interesting to work out how you think all of those different forms of finance work together. So again, I often think sometimes how you've raised money can be the kind of thing that even if you are orientated around grant finance, the community shares model gives the funder that sense of community buy-in to your project. The loan aspect from a funding perspective, I think, gives people a sense that there's been some really good due diligence done around the financial modelling, and that people have got those financial controls. So I think it's again, I just got one last slide I was going to just bring up about what people might want to consider as they're looking at that kind of broader finance mix. So I don't think there's any other questions on community shares. I was just going to finish off just with that one last slide. So I'll bring it up now, because I think feel free if you've got any comments, Toby, as I chat through it, because I think here we go. I'll leave it like that just for now. So I think I touched a little bit around cost of finance and funding, and when we were looking at social investment partner, I talked about it from an interest rate perspective. When I get people thinking about kind of finance options more broadly, I guess the comment I often make to people is we often think of grant funding as free money, and yet actually it can take a lot of time for doing applications, for potentially doing applications that get rejected. So I always put the challenge to people of, is it really free, and how much is your fundraising costing you? And are there quicker and different routes to finance that might be worth looking at? You may not have an option, and it's just a case then of working out how you absorb those costs. Toby, obviously, in terms of raising community shares, there's that cost of raising or getting the community shares document together. Thankfully, there's support around that you touched on.
Yeah, I would say the cost is fairly minimal because of the support that's available from ourselves. So I maybe didn't say enough on that, but we fund up to 6 days consultancy with an experienced community shares practitioner who can do the majority of that. Maybe not for you, but definitely with you. So there's a bit of volunteer time, but I would say not a huge financial cost.
Yeah, thank you. And then again, I always get people thinking about ownership, control and flexibility. So I guess it's always thinking, what is it that you want to do in your organisation, and how do you consider finance with that in mind? So obviously, if you're looking at the community shares route, you've got people have a share and therefore can have a say in your organisation. If you're doing grant finance, it's are you meeting what targets you want to set out, or are you trying to fit your organisation into funders' outcomes? And I think that's always a challenge that you have. And just looking at that from a kind of issues around control and flexibility, again, I think when you go in for things like grant finance, you're often told there's certain amounts that you can split to capital, some can be spent on revenue, money can go to core costs or it can't go to core costs. And again, when you look at things like crowdfunding, you've perhaps got less of those restrictions because you've already proposed what you will be doing to people that then give you the support. And equally, when people come in for loan finance, we look at a business plan rather than what is it you're trying to achieve and how have you costed that, rather than looking at individual components and saying, well, we only fund a maximum of so much capital and so much revenue. So it's just thinking it through from that ownership, control and flexibility perspective. I get people thinking it through in terms of partners and perceptions. So again, would you prefer, even if you could go to Main Street banks, do you want a social partner with you because that backs up your social story? Do you want a particular grant funder or someone with you, just because that, again, it sells part of your story and your ethos and almost your kind of community brand. And that thing about perception, again, we touched on it a bit just as we were starting. You know, the community shares option is the community buy-in. Perhaps the loan finance element is they've got some financial due diligence that's really been done in this organisation. And then lastly, just getting people to think it through in terms of what's your own business plan and focus. So what's the right finance option to help you achieve that? We're certainly not anti-grant funding. A good bit of grant funding in place can actually, for us, potentially look at reducing any risk that we might see in a project. It can form a great part of doing that. But also, you know, we're in a sector that's predominantly around social outcomes. So again, some things will never necessarily be financially viable if the social costs require more of that finance to really meet social outcomes. So again, what is it that you're trying to achieve, and how do you make sure you keep that focus? And then I guess the last one I always put is reporting and systems. Everyone always moans about reports to funders. They all ask for different things. SIS would ask for your social impact, but we would probably do more of a focus on wanting to understand your quarterly financial position. And again, I always say the other big difference, if you're looking at things like loan finance compared to grant funding, is yes, when you apply for things like grant funding, it's about what you're going to do next, but often the backup and the support they get for why they might support you might come from looking at your accounts. Have you spent money well in the past? Obviously, the focus on loan finance, given it has the repayment element, is all about cash flow projection. So it's looking in the future. So just really getting that balance and understanding those different options. So I just wanted to finish on that last slide of just points to consider. It's not necessarily an either or. Where does social investment fit as part of a blended finance model? How do you think of risk in your organisation? And the last question I was just going to raise today is, has the landscape changed? We've touched on COVID a little bit, but what's that meant in terms of consumer behaviour that Rachael was talking about? What's it meaning in terms of the funding landscape? Has lots of money gone to dealing with COVID, and actually funders might have less money? What's it mean in terms of local authority spend? So really understand how that landscape may have changed. It could have changed in your favour. It could now be providing a tougher environment in which your organisation operates. So that was just where I was going to finish today in terms of those points to consider. When we send the slides out, there is lots more information and video links within the slides. We've just tried to make sure that obviously the key focus of today has been around our guest speakers and taking the learning from them. So I'll stop sharing my screen, check if there's any last questions, and if there's not, I'll say thank you for today. Thank you for Toby for joining us. And the next session next week, we're looking at raising investment again, but we're taking a different sector again next week, and you can book on through the website. So look forward to seeing you again then. Thank you. Thanks, Toby. Thanks, Joe.
Thank you. Yes.